Welcome to the deep dive. We're here to, cut through the noise and get straight to the insights. Today, we're plunging into AP, that's AP Thailand, a real estate giant often talked about for its really attractive dividend yield. But, with whispers of an economic slowdown, shifts in purchasing power, the big question is, what's next for AP stock? We've pulled together the latest analyst reports, financials, strategy docs, trying to give you a clear picture.
Exactly. And our mission today really is to distill all this information into something actionable, for you. We'll look at AP's anticipated Q2 2025 performance, their, pretty ambitious plans for future growth, what analysts are saying, the consensus there, and what the charts are telling us too, just trying to equip you with the knowledge to see where AP might be headed.
Okay, right. Let's unpack those Q2 2025 results then. Analysts have been busy sort of crunching the numbers. Seems like a consensus is forming. What's the snapshot for profit and revenue looking like, especially with those economic headwinds you mentioned?
Yeah, it's an interesting picture for Q2. It paints a story of resilience, I'd say. While there's a bit of variation across the forecasts, analysts pretty much agree that AP's net profit should be around maybe just under 1 billion THB. Now, what's really telling here is, yes, that's down year over year, maybe 22% compared to Q2 2024, but, and this is key, it also signals a really strong quarter-over-quarter rebound. We're talking increases of like 14% to over 16% compared to Q1. This strong sequential growth, it's a crucial indicator. It suggests AP probably hit its profit trough back in Q1, and now we're seeing a significant recovery.
Okay, a clear rebound quarter over quarter, that's definitely positive. But profit's only half the story, right? How did revenue do in Q2? Especially with these market dynamics, did they manage to grow the top line?
They did, absolutely. The revenue figures show healthy expansion. Total revenue estimated close to 10 billion THD. That's up about 1.5% year over year. Sales revenue specifically climbed around 2.7%. And if you look closer, low-rise projects were a big growth engine. Over 9.2 billion THB contribution. That's up a hefty 19.5%. Key projects like Central Bangya and the City Bangya too were major drivers there. And here's where it gets really interesting. Condo revenue. It saw an almost, near 1,000% jump quarter over quarter.
Wow, nearly 1,000%.
Yeah, hitting 409 million THB, mostly thanks to the Aspire Aram Prive project. That one was fully sold, 84% transferred in the quarter. So it shows they can really capitalize when specific projects come online.
Okay, that's fascinating. Revenue up, but profit still showing that year-over-year dip. So that brings us straight to margins, doesn't it? What's happening with their gross margins, and what does that tell us about, their operational health in such a competitive market?
That's exactly the connection, yeah. The dip in net profit, despite rising revenue points, right to pressure on the gross profit margin, the GPM. Analysts expect GPM to drop to roughly 30.5%, maybe 30.7% in Q2. That's down from nearly 35% a year ago and around 33.6% in Q1.
Quite a squeeze.
It is. And the reasons seem to be, twofold. One, an intensely competitive property market that's forced promotional pricing, especially on our low-rise projects. And two, a higher slice of revenue is now coming from townhouses, which typically have lower margins. Just for perspective, their core real estate business GPM was around 29%, but their service business, that boasts much higher margins, over 83%, provides a vital buffer, really. But despite these margin pressures, AP has shown pretty impressive control over operational costs, SG&A expenses, selling, general and admin. They actually managed those down as a percentage of revenue year over year. Even including JV income, SG&A stayed well controlled.
Now, speaking of JVs, joint ventures. While some new condo projects started transfers, like Aspire Sukhumvit Rama 4, the overall profit share from JVs is actually expected to decrease moderately, maybe 28% to 44% down year over year.
Right, so managing costs tightly, but the market's still squeezing profitability. Okay. How does all this then, the revenue growth, margin pressure, cost control, how does it translate into their broader financial stability and the key ratios investors look at?
Yeah, their financial stability remains a really significant strength. And that's crucial right now navigating these conditions. AP's net debt-to-equity ratio.
Yep.
Very healthy. Sitting between 0.73 and 0.79x. That's comfortably below their own policy ceiling of 1x. Shows they're well capitalized. Other key ratios, PE around 5.01x, PBV of 0.53x. But what really stands out, especially for many long-term investors, is that dividend yield. It was around 8.16% as of late July 2025. And that strong financial health really underpins their ability to keep paying that appealing dividend.
Okay, that yield is definitely eye-catching. So it seems AP is navigating a complex present with challenges, but also some smart plays. But for long-term investors, it's often about the vision, right? Beyond these immediate numbers, what's AP's big picture? How are they positioning themselves? What are their plans for, say, the next year or so?
Right. This is where their proactive strategy really comes into focus. They have their 2024 strategy, Empower Together, and the 2025 follow-up, which translates roughly to creating the best for the best life. It really underscores a commitment to innovation, customer-centric design. They're not just, building units, they're trying to craft lifestyles. And for 2025, their targets are, well, definitely ambitious, planning to launch a staggering 42 new projects.
42, wow.
Yeah, 42 new projects totaling 65 billion THB in value. They're aiming for 55 billion in sales and nearly 53 billion in recognized revenue. Those are significant numbers. Shows real confidence in their approach, despite the market.
42 new projects in 1 year. That is massive. How are they diversifying that? I mean, what kind of projects are we talking about? Are they covering different segments?
Very much so. Their diversification strategy is highly targeted, covers a wide spectrum. For single houses, they're planning 15 new projects, value between 23 to 26.5 billion THB. A big highlight is their push into super luxury with the Palazzo brand. Properties over 100 million THB in prime spots, like Krung Thep Kretha. They're also doing more urban single houses with Ban Klong Krung and launching new brand, Beyond, for modern 3-story homes, trying to be distinctive.
Okay. Luxury, urban, modern. What about other segments?
Yeah, in the townhome and semi-detached market, they want to reinforce their leadership. Plans for 18 new projects in 2025, valued at 15 billion THB. What's interesting here is the innovation. Models like Kalev, which actually allow for separate floor rentals. That's pretty unique for urban living. They're also developing a whole new AP community out in Wang Ek Dilawadi Rangsit. And for condos, 6 new projects planned, worth over 20 billion THB in 2025. Focusing on their familiar life and Aspire brands, plus they expect significant revenue from 3 ready-to-move-in condos this year, totaling about 11.5 billion THB. So yeah, multi-pronged approach, catering to varied demands.
Sounds like a very aggressive, very diversified strategy. But given the current climate, what are the key factors that could, boost this growth? Or on the flip side, what are the main hurdles?
That's the crucial balance, isn't it? On the plus side, their strong financial health, which we talked about, that's foundational. Low debt to equity, plenty of available credit, over 12.7 billion THB, gives them liquidity for expansion. Their long-standing alliance, 12 years now, with Mitsubishi Estate Group, that provides stable partnership funding, especially for JV condos. Plus, they have a solid backlog, 16 billion THB in low-rise projects, and steady cash flow from over 200 ongoing projects. And looking ahead, if interest rates do start coming down, as some analysts expect by late 2025, well, that would definitely help property purchases.
Makes sense. And the negatives, the headwinds.
Well, there are definitely notable headwinds. That persistent global economic slowdown, reduced consumer purchasing power, that continues to cast a shadow. Intense competition is driving that promotional pricing, hitting the gross margins like we saw. The shaky economy in Q2 also led to higher loan rejection rates for buyers. That signals caution. And on a broader scale, KGI flagged high market volatility due to political uncertainty in Thailand that can impact overall sentiment. And, kind of surprisingly, even fears about earthquakes apparently dented Congo pre-sales in Q2, shows how unpredictable external factors can play a role.
Right, so aggressive plans, solid financials, but battling a tough market, political jitters, even earthquake fears.
Okay.
Given this complex mix, how are the financial institutions, the analysts, actually viewing AP stock right now? What are they saying about target prices, overall sentiment?
Well, the general feeling among analysts seems quite positive, actually, leaning towards a strong buy or outperform consensus. TradingView, for example, aggregates 14 analysts. Their average target price is 9.20 THB, though the range is pretty wide, from 7.80 up to 11.8 THB. In InvestX, they did trim their target slightly down to 10.20 THB, but they're still keeping an outperform rating. They see significant upside. Philips Securities has a target of 8.30 THB, also recommends buy. And KGI actually upgraded AP to outperform, even put it on their recommended list for September. They're citing strong potential for the second half of 2025, maybe even earnings upgrades. So yeah, there's a range, but the overall mood is pretty optimistic despite the challenges.
And you mentioned that high dividend yield earlier, seems like a recurring theme. How stable are those payments likely to be, especially with those margin pressures? What's the outlook there for dividend investors?
Yeah, that's definitely a key draw for AP. Philips Securities puts the current yield at an attractive 7.3%. That's quite a bit higher than its 5-year average of 5.8%. InvestX also mentioned a 7% yield. So it's very compelling if you're looking for consistent income. And crucially, the stability seems well supported. Remember that strong financial position, low debt, ample liquidity that provides a really robust foundation for dividends, even in a tough market. There was even a news piece back in May 2025 highlighting how AP benefits from falling rates and offers ample dividends. So it reinforces that appeal as a reliable pair.
Okay, good to know about the dividend stability. Now let's switch gears one last time. Maybe look at the technical side. What are the latest charts, the trading data telling us about AP stocks movement right now? Any key trends?
Sure, looking at the data from early September 2025, AP was trading around 7.55 THB. It had a positive day, up about 2.7%. The daily range was between 7.35 THB and 7.60 THB. So some upward push within that short window, but you need to zoom out for the bigger picture. Over the past 52 weeks, AP has seen significant volatility. It's traded as high as 10.50 THB and as low as 5.60 THB.
Quite a range.
Exactly. So what this implies is, maybe some positive feeling right now, pushing it towards the top of its recent daily range. But the stock is still trading well below its 52-week high. It is, however, comfortably above the 52-week low, suggesting there's some underlying support there. The trading volume over 6 million shares that day and value around 46 million THB, that shows it's a liquid active stock. For technical traders, probably watching how it behaves around that 7.6-year to 7.80-year THB level will be key. Breaking past could signal more upside, but failing might mean a retreat back towards support.
What an incredible deep dive indeed. We've really peeled back the layers on AP Thailand today, covered everything from those expected Q2 results, their, very ambitious strategies, what the analysts think, and the technical pulse right now. It's clear AP is navigating a really complex landscape, both formidable challenges and significant strategic moves happening.
Indeed. Yeah, pulling it all together, I think a key theme that emerges for AP is maybe intelligent resilience. They're clearly facing headwinds, slowing economy, competition pushing margins, we saw that, yet their aggressive new project launches, that diversification, especially the push into luxury, combined with their solid financial health, strong liquidity partnerships, it paints a picture of a company actively adapting, building for the future. And that high dividend yield, underpinned by their financial strength, it remains a really compelling feature. It really leaves you, the investor, with an important question, I think. How do you weigh those immediate market pressures against a company's deep financial strength and its bold long-term strategic bets?
That is a powerful question to consider. We hope this deep dive has given you a clearer lens on AP. And hey, if there's another stock you'd like us to dissect or a topic you're curious about, please let us know. We'd love to hear from you. Don't forget to follow, like, and share to support our team. Thank you for joining us.